Welcome my dear students. We are proceeding towards cash flow statement. Cash flow statement is one of the major topic in board exam. Cash flow statement is prepared on the basis of accounting standard 3 and in board exams it is for 8 marks, and for those 8 marks you need to prepare well and understand the concepts. So we are going towards this chapter, cash flow statement, and we will understand the concepts in best possible manner. See my dear students, you can see on the board, cash flow statement is a statement. When we are writing cash flow statement, it's 3 words. The last word indicates it's a statement. Statement means financial statement. Then flow indicates the change. The change can either inflow or outflow. And when we are talking about the first word cash, it is not cash only. It is cash and cash equivalent. Cash and cash equivalent, my dear students. So when we are talking about the meaning of cash flow statement, it comes like this: a statement which indicates inflow and outflow of cash and cash equivalent from 3 kinds of activities. Number 1, operating activities. Number 2, investing activities. And point number 3, financing activities. Hence the definition of cash flow statement, when you are learning, that should be a statement which indicates inflow or outflow of cash and cash equivalent from investing, operating and financing activities. So my dear students, the activities should be mentioned there in order to secure full marks. See my dear students, on the screen you can see it shows cash movement. Cash movement during the accounting period, and the item of cash inflow and outflow can be seen when we are preparing the cash flow statement. When we are talking about cash, that means cash and cash equivalent, which includes bank balance, marketable securities, which is also known as current investment. See my dear students, cash flow statement provides the relevant information in assessing the company's liquidity, the quality of earning and solvency. See students, you have to understand the importance, the advantages, the limitations, and understanding of concept will create the idea of this chapter, cash flow statement, and it will help you in doing the practicals for sure. Students, there are 3 kinds of activities we have already discussed. The activity number 1 is operating activity, and that operating activity means the principal revenue generating activities. Principal revenue generating activities relates to trade and or related to those goods and services in which the company deals in. Hence, when the cash comes in to the business, that is called cash inflow from operating activities. When cash goes out, it is known as cash outflow from operating activities. See my dear students, similarly investing activities. Investing activities are related to acquiring the fixed assets, tangible fixed assets, and its disposal, means when you are selling those fixed assets. Then similarly, non-current investments, when purchased or sold, it is actually the investing activity. Then the third most important activity is financing activity. Financing activities are those activities which relates to share capital and non-current liabilities. Non-current liability includes debenture, loan from bank, etc. When we are talking about financing activity, it also includes both inflows and outflows. When the cash comes in from various activities like share capital issued, issue of equity share or issue of preference share. When the issue of debenture take place, it gives the inflow of cash and cash equivalent. Similarly, the cash may go out of the business like payment of dividend, like debentures redeemed, like preference shares redeemed, etc. My dear students, remember one thing. Equity shares cannot be redeemed in lifetime. So, you have to understand the concept. The financing activities are again related to inflow and outflow of cash and cash equivalent, but from financing activities which relates to share capital as well as non-current liabilities. I have made a chart for you for the better understanding of cash flow, inflows and outflows. See, three kinds of activities you can see: operating activities, investing activities and then financing activities. All the activities are indicating both inflows as well as the outflows. When we are talking about operating activities, we have already discussed principal revenue generating activities. Inflows indicates cash sale of goods and services. Then again cash received from debtors. And my dear students, when the fee is received or commission is received, that is due to the trade, goods and services are sold or purchased. And when you are dealing in goods and services, you may either receive commission or pay commission. When you are receiving commission, it will be inflow. When you are paying commission, it will be outflow. Similarly, operating activities may have outflows, which is just opposite of inflows. When cash sale of goods and services are taking places, it is inflow. When you are purchasing goods for cash and making the payment to the creditors, it is the outflow of cash flow from operating activities. See, my dear students, various operating expenses are incurred. Wages are paid, salaries are paid, operating expenses are of various types which may be incurred by the organization, and whenever the flow of cash is there, it will be the operating activities. Even the tax paid is known as operating activity and it's an outflow. When the question is asked in the board exam, you must be very clear whether the people are asking for inflow or outflow. If they are asking inflow, you have to items related to inflows only. But when the people are asking the outflows, you have to mention the items related to outflows. Please, ideally, you should understand which activity they are asking and whether they are asking for inflows or outflows. Then the second very important activity is investing activity. And the inflow indicates sale of fixed assets. When we are selling fixed assets, it gives inflow of cash. Then sale of non-current investments, it is again inflow of cash. Rent received, then dividend received, etc. are providing cash to the firm. And similarly, when purchase of tangible fixed assets take place, it is outflow. Purchase of investments, non-current investment take place, it is outflow. Similarly, when intangible assets are purchased like goodwill purchased, that is also outflow of cash. Then financing activities includes issue of equity shares, issue of debentures, issue of preference shares, funds from loans, and these are the inflows because we are getting the funds in the firm. And when we are talking about redemption of preference shares, redemption of debentures, payment of loans, interest paid, dividend paid, etc. That is, the funds are going out of the business, hence it is called outflow from financing activities. When we have studied these differences between operating, investing and financing, and we will understand the concept in depth. So my dear students, please learn the theory and understand the concept, and we will meet in the next class once again. And till then, thank you very much.